This interview is with Scott Lawin, the CEO of Candy Digital. Candy has raised over $100 million in less than 2 years, straight out of the gate, and with a valuation over $1.5 billion. They are creating NFTs. They partner with large-scale ticketing agencies, professional sporting organizations, and he describes exactly how they do it. The project started as a joint venture between Galaxy Digital and Fanatics, and we talked about the origin of the project, how they're doing, his long-term views on NFTs and crypto more generally, and just his overall journey, which is fascinating. So I hope you enjoy this conversation with Scott Lawin. Scott, we are live. Thanks for hopping on today.
You bet, Mike. Glad to be.
Yeah, I'm excited to chat with you. You're running one of the most interesting projects / companies I've seen and had the chance to talk to. The thing that struck me in doing research on Candy was the structure of the origin with the JV between Galaxy Digital and Fanatics. I want to ask you about that story. Where were you positionally as these two companies? How did those early conversations go to structure the business?
Yeah. So, really interesting way that Candy kind of came about, a lot related to sort of my background. So my career prior to entering the Web3 space, was in finance. So I spent kind of 27 years in finance and in various forms. Along that journey, I met and became business partners with Mike Novogratz, the founder of Galaxy Digital. And so really my entry into sort of the blockchain space happened in 2016, around the time that Mike was really ramping Galaxy up. And so my first sort of foray into blockchain and crypto was really through the lens of finance, right? It was sort of looking at cryptocurrencies and smart contracts and really looking at through the lens of, okay, what does this mean from a traditional finance perspective? How is it going to be disruptive? That was back in the days of ICOs. Was this going to change the way financing worked? Were these securities, et cetera? And so that's kind of where I first sort of went down the rabbit hole and started to kind of educate myself and get involved in the space. Fast forward to 2020, mid pandemic, Mike and I were, kind of sitting down and talking about, where we saw adoption look like, not just from an institutional perspective, but really, where we're going to get the next 1 million, 10 million, 100 million people right into the space. And so thinking about content as an on-ramp, and looking at music and entertainment and sports and culture, and then really leaning into sports and saying, okay, billions of global customers, passionate fan communities, and a sports collectibles business that, had existed for decades and was sort of turbocharged by COVID. It feels like a place where you could start to see that extension of, existing activities, bringing those things on chain, and then sort of moving from physical collectibles into digital collectibles. If you're going to start a business in the sports space, really number 1, 2, and 3 on the list of potential partners are Michael Rubin and Fanatics. And so that's really how, kind of that union came together, the joint venture between Galaxy and Fanatics. And then as we were preparing to announce the launch of the company in June of last year, we added a third founding board member, which is Gary Vaynerchuk. And, for folks who know Gary's really at the heart of not just the sports collectibles business, but, early pioneer and adopter of really seeing the potential of NFTs and Web3, right? And so that's really kind of how the dream team from founding board came together and how Candy got its start.
Interesting. And I think probably more people are familiar with Gary than they are with Galaxy or maybe even Fanatics.
Yep.
What's the main business line for Galaxy Digital and also separately, but for Fanatics?
Yeah. So Galaxy really is kind of, the premier merchant bank in the blockchain and crypto space. So think of, think about what Galaxy is doing as sort of building the Goldman Sachs of crypto. So, a trading desk, an investment banking advisory firm, a private equity sort of venture fund management business. And really Mike Novogratz was kind of the earliest sort of senior person in the, TradFi world, really telling the story of digital assets, right? And why blockchain was going to transform not just finance, but, culture and art and, connect with everyday people that, and not just be a store of value or something that the crypto native community is betting on. Fanatics is the world's largest e-commerce player in sports, and really around sort of sports apparel, essentially running the e-commerce sites for Major League Baseball, the NFL, strong relationships with teams, leagues, and athletes. And so bringing together not just the content component, but the commerce component in the sports space.
Interesting. And then the strategy, or at least what played out, was pretty early on. The company raised 100 million from SoftBank and Insight Partners, which is kind of what sparked the whole project. I feel generally that you have the option to do that. Infiltrate a ton of capital. If you have like celebrity founders, like what Quibi did, or if you have joint ventures with other invested partners, some sort of momentum to kick it off. What was typically 99% of the time, it's like family fund puts in 300K. They find product market fit, Series A, seed round, Series B, C, D, IPO, $100 million raise. How was the path different on just injecting 100 million into this from such an early stage?
So I think what was differentiated about it was maybe two or three things. One was the fact that we launched the company with an exclusive partnership with Major League Baseball, right? A long-term partnership. And so, Candy is a business that's set up to really focus on world-class IP and content and create officially licensed collectibles across sports, entertainment, and culture. And so starting out with partnership with Major League Baseball and the Major League Baseball Players Association, and then looking at launching our business in October with the backing of Galaxy, of Fanatics, Gary's involvement. I think what Insight and SoftBank and our other investors saw was, a couple different things. One, the idea that, relationships and licenses in this space matter, right? That we weren't out there trying to create our own IP, right? Our own avatar project, and hopefully it caught on, et cetera. We were connecting with, the hundreds of millions of fans in the space to onboard them into this world of digital collectibles and Web3. And that, our ability to go and source additional rights and additional partners, which we have now with NASCAR, with WWE, with Netflix, with Getty Images in college sports, that this was going to be a really big business. And so those were really the fundamentals, for around our Series A raise.
And how do you think about the weighted influence of technology versus partnerships? I imagine if you have those partnerships, those are very difficult. I imagine there's only one NFT partner for NASCAR. There's confusion in the market or redundancy if you have multiple. So they pick one. You guys are the one. Is the technology kind of a softball, like a layup, so to speak? Or is it really about the big partnerships, or how do you think about that?
I think it's, listen, the tech is important. I think our approach to the space is really around designing compelling assets, engagements, and building communities that connect to fans and connect to collectors, right? So, our thesis in the space is, creating sort of the next generation of collectibles that connect people to their passions. The tech that we've built, is the full stack tech from, our marketing to our design, to our primary, to our secondary, to our customer support, to our community. But the tech that we're building isn't necessarily going to fundamentally change the way that Web3 functions, right? And so, we view ourselves as the institutional grade partner for these world-class brands to bring their content and their communities into this space. And we ourselves are going to go, continue to go and partner with folks who are deep in the tech space. And so, we can have multiple partners there as this space continues to evolve. I think that was one of our core thesis, was that, in 2020, nobody really knew how to spell NFT, right? Unless you were sort of in the crypto space. In 2021, the world exploded, $25 billion of volume later. But as you know, we're still super early, right? And so this is very much about, from our perspective, reaching out to folks who are coming into this space for the first time with, a fiat first approach. You're connecting them to the content and the stories that they love via a digital asset, and then sort of showing them the path on how those digital assets can enhance that experience or the entertainment value or the connectivity or the rewards, a big part of that community.
Mm. And what have you found so far? I know it's kind of early, and I know we just hit kind of a depressionary period on crypto in general, but are there, you mentioned the collectibles, sort of emphasizing that. I'm picturing there's the in-person experience. There might be some enjoyment of having a piece of art or something, but I imagine the collectibles is largely associated with a audience base that is much more passionate than the average casual NASCAR, participant or NBA sports ticket holder.
Yeah. So I think, our kind of core philosophy here is that there's kind of two important things. One is not trying to convince people to change the way that they engage or experience a sport, but to take what people are already doing as fans and amplify that and add additional value through a digital collectible. And so if I just think about like kind of our core product sets, right? The first is a digital trading card, right? Which is sort of a natural evolution of the, trading card 1.0, the piece of cardboard that, we all grew up collecting and many people still do, right? We think of that as 1.0. We think of the digital picture of that as 2.0. And then we think about, what we're creating, which is the digital collectible that's a static image, a video file, a digital signature, has audio, has motion graphics, and has dynamic statistics that actually change based on the player's performance, right? And so taking something that isn't just scarce and rare, through the blockchain and through, a release structure, but also connects people back to the sport in a real-time fashion, right? So that's amplifying what people already do. We have a digital ticket product that, harkens back to the days that you'd show up at the ballpark and get, your ticket that you could put up on your bulletin board. That doesn't exist anymore. And so our digital ticket, has that same commemorative value to the individual. May not be worth anything in the secondary market, but that's okay, right? We're not in the business of just creating digital lottery tickets. We want things that connect people to their love of the sport. And then our digital memorabilia, a digital jersey is a rare asset that you can collect, but it's also something that through an AR lens, you could wear and take a picture of and share out to your community, right? And so that idea of connectivity to the game itself, the participation of the fan, and then this spectrum of digital only, digital physical, and digital experiential is really kind of what our whole thesis of the space is.
It's interesting. The first thing that comes to mind when you sort of map that out, 1, 2, 3, is what's 4, 5, 6. And I tend to think that tell me your reaction to this, but I tend to think that there is a centralization, decentralization, or organizational and then fragmented patterns to these things. So you have originally you just have people throwing a ball around in a garage and then like put a rim up there, like we're bored. And then they throwing it in. Okay, now we got basketball, and then basketball kind of grows, and there's teams, and there's people playing. It's really competitive, and all people care about is basketball. And then there's like the analog representation of the game. So you can't participate in the highest level. I can't afford to go to a game. I don't live in a tier 1, whatever it is. Or even if I do go, I want to play when I get home. Even using that word "play" is like a reference to it. So I collect these cards. They're collectibles. I have all these collectibles. You get together with friends. It's like when you care so much about it and you collect them, you want to engage other people. So I found one thing that was interesting about Pogs is that you don't just collect Pogs, you play Pogs. So there's like a competitive element to it with other people, like a gaming element. And I tend to think that there will be this continued pattern where like collectibles represent the real thing, and then collectibles get more dynamic, like you said, digitally they're more dynamic, and then then they're now integrated with other people's collectibles, and they're somehow competing, or they're playing with each other, and now you're sort of like you're like reproducing the in life actual game in sort of a new remixed digital version. Does that resonate with you?
Absolutely. That's really, that element of engagement is another sort of core part of what we're doing. It's so, you know, very simply, we start out with collection challenges, and all of our, products that we release have an element of, if you collect the full set or some subset, right, there's a reward or an upgrade. We've moved there now to burning challenges. And so, one of the things, if you were a traditional physical card collector, when you opened up your pack of cards, you got a bunch of guys that you didn't really care about, right? They went in the trash or they sat in the shoebox. Well, now, we've created ways for people to actually dynamically burn those NFTs and upgrade for a new rarity. And so creates this really interesting sort of supply demand, dynamic, some game theory around, let's just say you have an unpopular player and everybody wants to burn that player. Well, suddenly now that player who might have been a core rarity, there's only 100 of those left. And suddenly now that's a much rarer card than even some of the most popular ones. Right. And so that sort of game theory is, our community loves it. Right. And they're super excited about it. And so then taking that to your point, using those dynamic statistics and starting to use the on-field performance to create challenges and gamification, et cetera, like that's the next step.
Yeah. Yeah. It feels like it has to be, because there's a certain attrition of attention, I think, that's correlated with collectibles. You collect them, and then if that's all there is, if there's just collection, then especially if it's digital, because you have to like boot it up, it's not like a piece of art I can hang in the wall and sort of casually with no effort, passively I can get value from it by looking at it. Like if I have to double click on it, pull up the thing, it's like even in pogs, right? People tend to lose interest. I don't know what the numbers are, but I would imagine that people tend to lose interest in collectibles because you have to like pull it out of the shoebox, out of the closet, put it on the ground. So people generally display collectibles, like if you're collecting license plates or bottle caps or whatever it is. But I do think that sounds spot on to me, that there has to be a continuation, or there's just an atrophy of what you can do with these things.
Well, I think there's also, a future which we're testing today, which is also how these collectibles actually enhance and amplify your experience. And so you can imagine, we have a product which we call Play of the Day, right? And so every single day that baseball games are played, MLB determines the most important play of the day. We create that as a collectible overnight. We mint it for 12 hours and then it's done, right? And so some days we have 250 people who decide they want to get play of the day. Sometimes we have 5,000 people who want the play of the day, right? Depending upon who the player is, what it was, et cetera. But, if you own the icon, which is what we call our digital trading card of a particular player, you're at the stadium, you're sitting in the bleachers, and that player hits a home run, right? To where you're sitting in the bleachers, suddenly now your card can get upgraded. You can win that play of the day, or you can win something else, right? And so this idea of how do you reward fans for their ownership and participation, and, not just sitting at home, on their computer opening blind box packs, but actually at the stadium, right? Or watching the game on television. And so, we've been really lucky with Major League Baseball as a partner and with our other partners, because they're leaning into this whole idea, right? They see the future. They want to find more ways to understand their fans and connect with their fans. And they see digital assets as, as the path forward.
Mm. One thing that comes to mind here is the influence that glasses that I put on that will augment or virtual my reality. Is that something that's like on the roadmap, or is it more kind of high level thinking about what might be someday? How do you sort of see our transition from where we are now to I don't know, when people say metaverse, I think they're just generally referring to all this Web3 stuff, but I think of like specifically VR and AR, things that Meta are creating in Oculus is like something that I'm pretty bullish slash optimistic on the impact that it'll have on, even just this conversation. If we could have this in a setting where it's like indistinguishable from real life and we're at a coffee table, it's just so many things become so much more richer. And I'm curious what your thoughts are.
Yeah, so we're huge believers in, the direction that we're going in terms of blurring the lines between digital and physical experiences. And so everything we design as, kind of a Unity based, AR or VR asset, even if today the experience isn't there. And so, what we think about is okay, first of all, like I said, sort of the digital jersey. It's a digital collectible, but through an AR lens, you can wear that jersey and share a picture out, right? Ultimately, as we start to, we're doing some interesting things in 360 video motion capture where, we're scanning physical objects and actual athletes, right? So, to get to the point where your favorite player, can show up in your living room, right? Swinging the bat and hitting that home run. And because we scan that player and rig them almost like a video game character, what they do can change based on what they did the night before, right? So when you pull up your Justin Turner 3D figure and the Dodgers won the games, he might be celebrating and his bat might be on fire, right? And so, that can happen in your living room, right? And then as we get to a world where VR becomes, more pervasive, and I'm a little bit of a seller of the idea that everyone's going to walk around with Oculus Rifts on their head, but those experiences will become more meaningful. These assets will have a role there, right? And so, this idea of composability across platforms and interactivity is just going to get richer and richer as this whole ecosystem gets built out.
Sorry, when you say seller, are you able? Do you believe that's to be the case?
Sorry, that's a Wall Street trading term. I don't.
Oh, okay.
I don't think we're going to get to a place where we're in a Ready Player One world where everyone just sits with Oculus Rifts on. But I think those experiences will become more pervasive.
Yeah. It certainly has to be like grounded locally, right, in your living room or something where you have the first is going to be the line and the big helmet, and then it's going to get super thick. Then as I look at you, you have glasses on. Eventually it'll be like, I don't even know if those are,
It'll be near field. Listen, at the end of the day, right, not to get philosophical, right, humans are social creatures. And, while putting on, an Oculus and being in a virtual world, for anyone who's done it, right, you realize very quickly what the potential is because your mind believes that you're there. But until, it's like the fax machine, right? The value of one fax machine is very low, but when you build the network, the value increases exponentially. And so as more and more people start to experience it, then it won't feel as strange where I have my goggles on and everyone else is watching me. We'll all be doing it together, but I think we got a ways to go to get there. And AR is going to be, I think, the pervasive tech that bridges that gap. It's not going to go away and be replaced by VR. It's just going to become a more important version of it.
Yeah. I tend to think that's right. Like there'll be an overlay, which probably is where the majority of the like collectible NFT, your world stuff sits on the AR side. Like I'm wearing glasses and then, on the table, there's nothing actually there, but on the table, I can see these cards and they're tied to a digital, unique, non-fungible token. So
and listen, you think about it, right? Collectibles are about identity, right? They're about storytelling. They're about expressing my identity as a fan, either of a player or a team or a sport that I love. If they're about expressing my identity as a collector of art or music or whatever. And so, and they're about connecting with those stories, right? And so as you move into a world where AR, it becomes pervasive, right? I might have my NFT of the Green Bay Packers spinning over my shoulder, right? And for anyone who has the glasses on, they see that NFT, right? When they've got the glasses on, they know I'm expressing my identity. So you think about the way we express ourselves now through clothing, through accessories and things like that. Digital assets are just going to be another evolution of that.
Yeah. I almost find that in times when technology accelerates the quickest, it's most helpful to have a strong philosophical grounding because the potential for the technology to go in different directions is very high. and the practicality or the gut check on what we're building and why we're building it seems to be correlated to the potential for the technology to go in different directions. It's like, well, if you could do anything in the world in this new virtual world, what do you do? Why do you do it? The concept of a collectible to me it seems like it's collectible because it's unique. If I could just print a million of them, defeats the point. So NFTs create that potential for digitally represented collectibles. Then you say, well, why do we have collectibles? Is it a sense of scarcity that people feel that they want something to, preserve their wealth? Or is it like, I want to have fun because I'm bored? Or is it, I like connecting with other people? Like there's some bedrock to the emotional drive behind this whole movement. And I find if you're detached from that, you don't have to be a philosopher, but if you're completely detached from it, then you wind up like, 10x leveraging on you end up becoming buying at the peak, like, cause you're sort of not grounded in like, what are we doing?
Yeah. I mean, listen, when we got started, we said very definitively, we're not going to build a company that just makes digital lottery tickets because, there's a certain segment of people who will be looking for those, but there's no real sustainable value there. Right. And so we think about, this idea of value exchange. There's no question that in the world of physical collectibles, there's an economic value exchange. People want to find the rare version, right? Or they want to collect the asset of the player who's a rookie who they think is going to become Mickey Mantle in the future, right? But there's other forms of value exchange, right? There's entertainment value, right? Collecting something that is joyful to look at or compelling to look at has entertainment values. There's utility value, right? I've built my collection and, maybe because I'm the biggest one of the biggest collectors of Yankees NFTs, I get to go to the stadium early and watch batting practice, right? There's community value, right? Because now that I'm a collector of these assets, I'm part of a like-minded group. I mean, go to our Discord. I think we've got one of the best Discords in the space because not only are they NFT collectors, they're passionate baseball fans, right? And these people have become friends. They meet up and go out, they go out to dinner together because they're excited about being on this journey and connecting their excitement of where we're going with Web3 with their passion for baseball. So, there's lots of different ways to exchange value in this space. And if people only focus on, hey, I can mint it for 0.1 ETH and I hope it's worth 5 the next day, I think that's short-lived.
Yeah. It's a good, I like that you bring this up because there's different almost hierarchies. So if you picture like social hierarchies in different domains, you have baseball, NASCAR, like even within the global domain of sports, and people are in that community. They see what the top looks like and they know, they recognize the hierarchy. Like if you win the game, it's better than losing the game. And if you win the series of games, that's the best. And if you win the series of games every season repetitively, like a franchise dynasty is like, that's the holy grail, right? Those are the people we like worship effectively in this hierarchy the most. And I think the recognition that you're in this hierarchy, that you're participating in it as a fan says, this is, maybe I can't be a professional sports athlete, but I can at least like climb the hierarchy by being connected with that. Or there's something that I think that people like deep down inside hate feeling lost or any lack of identity. So, typically I would say in the US, like it's been, and even in the last 19th, 20th century, it's been country, like identify with my country. And now that seems to be like rapidly disintegrating. Like religion is rapidly disintegrating. The people under 40 years old are like way less likely to go to, I forget what the stat is, but way less likely to go to church. The like loyalty to the country, self-identity of the country is decreasing. And I think this is like what you're creating for helping to create these hierarchies are what people are identifying with. And these new like structures of value seem to be how the NFTs are almost like a mechanism for quantifying the social placement to some degree within these different areas. And I mean, I'm kind of riffing on this a little bit, but
I think you're spot on, right? And if you think about kind of what we just went through in kind of Web2 and the internet, right? What the internet allowed you to do was to sort of find your people anywhere on the planet, right? Where, pre-internet, depending upon where you grew up, right? If you were in a city, you had a much better chance of sort of finding the other weirdos like yourselves, right? With common interests. If you grew up in the sticks, you might never find those people, right? Because your connectivity layer just wasn't there. The internet blew that wide open, right? Doesn't matter what your niche interest is or your passions. Like if you go digging, you can find it, right? What I think Web3 does is it brings ownership to that idea of community, right? Where not only are you connecting to those people, like you can now sort of own assets that binds you together in an economic fashion, if it's a DAO or through a series of collectibles where, you're on that journey in a much more invested way. And I think that's really interesting. And it's super early, right? We're just going to continue to see this sort of evolve and figure out what it becomes.
Mm. Do you think the influence of NFTs, maybe broadly Web3, will increase the number of playing fields, or will it act in the reverse where it consolidates them? So like, will there be new games created and like people are more diverse in their interests, or do you think it kind of has the opposite effect?
I think it's going to do both. I think, the most powerful element of Web3 is really unlocking the creator economy in a, much more significant way. And, listen, this is sort of motherhood and apple pie in the space, right? But the idea of, not just creators, but participants being able to sort of have ownership and an economic stake in building something together is a really powerful idea. And that's not going to go away. That said, that results in a lot of fragmentation. And so there will, I think, almost by definition, be organizing principles that bring some of those things together. And whether that's in an exchange or whether that's through a platform, because at the end of the day, you still have to find those other people, right? Mm-hmm. And so I think it puts a lot of the power back in the hands of creators and communities. It takes away power from the intermediaries, which I think we all feel is a good thing. But it doesn't mean that, some of those centralization is going to disappear forever. Like, that's the utopian vision that I just don't think humans are quite ready for or necessarily want if they think about it. But we'll find the right balance.
Yeah. It's a good point. How about within the different sports and the different categories that NFTs operate? Are there some that stand out from others? Is NASCAR or MLB or one of these like very more popular than the rest?
It's pretty early for us, right? So we launched in June of last year with Major League Baseball as our partner. As I said, sort of now WWE, NASCAR, Netflix, Getty. We've got a couple of other sports properties that are sort of in the works. But the bulk of what we brought to market right now is around baseball. We're actually in the market with our first WWE product today. And we're really excited about it. I think from our perspective, our approach to the space is there isn't a one size fits all strategy. And so our strategy around what we're bringing to market with Major League Baseball we're not going to sort of copy and paste that for NASCAR or copy and paste that for WWE, because the fans are different. The sport's different. The way people engage are different. And so for us, that's kind of the exciting thing, is testing and learning. And there's a universality around collecting a card with a athlete's image on it and statistics. But the way that looks for WWE is very different than what it looks like for baseball.
Yeah. No, it makes a lot of sense to me. And I imagine you would say you'd see it fragmenting out to eventually it's like every sport is going to, no matter how rare it is, small it is, why not? Yeah. And you just start at the top.
I think in 5 to 10 years, digital assets are just going to be pervasive. We won't really call them NFTs anymore, right? They'll just be the things that we interact with and get when we buy a ticket or go to an event or, join a community online, and they become part of our digital identity and, part of our experience. Right. And, I as I say on many of these types of conversations, I want to put a bounty out there for people to find a better word than NFT. Right.
Yes.
I think it does a disservice to where we're going, because it turns people off. And the idea is this is just it's a digital token. It's a digital receipt that represents ownership in something.
Yeah. Yeah, I almost think it'll just dissolve over time
It will.
because it'll be
No one says, I'm going to go to the internet to look something up,
right.
right?
Exactly. If you watch like old news channels, they're like, go to HTTP semicolon www dot. It's like they would always include the www dot, but now like if you give someone your domain, it's like you wouldn't say
Yeah.
www dot candy dot. You would just say .com. The
Yeah.
.com at the end is the reference to it. So I almost wonder if there's like it's like there's like a dot. Like if I say give your email, just putting just putting something and then at Gmail will indicate it carries the concept of email within it with that little at sign. So I almost wonder if like the hashtag, right? Like when you see hashtag, it carries so much. It's like, okay, that's something that's viral on the internet, probably on Twitter. It's going to be clickable. So it's like we need the hashtag or at symbol. I think it's more like a symbol than it is another word.
Yeah. It's a new.
What else is left on the keyboard? All right. It's got to be, let's go with $sign. Scott, you're the guy. Go with the $sign. If it's got $sign name, that's the NFT.
Yeah, too much heavy association with $sign. We got to go somewhere else, but we'll figure it out.
Oh, okay. Well, what's the next one? You got the ampersand. That's the next one.
There you go.
That's funny. So I'm curious to ask you about the market. What would you, sitting here August 16th, what do you take away? What are your like lessons learned or observations about other people's on this like fast rise, fast fall, and now we're kind of figuring out what's next? How do you sort of 2020 analyze it?
Yeah, I mean, listen, I guess what I would say is it's not totally unexpected. Certainly, if you've been in the crypto space, you've seen the run-ups and the retracements for sure. I think what got people and like any new tech, right there, lots of people get excited about it, sort of rush in. The market gets ahead of itself. It retraces, it flushes out the folks that are the tourists, not the settlers. And then you kind of go on to the next phase, right? And I think that's exactly what happened, right? Like I said, at the end of 2020, no one was talking about NFTs. In 2021, everyone wanted to mint an NFT, buy an NFT, trade an NFT, etc. And as the barriers to entry are pretty low for people to come into the space, and so a lot of people got excited about the potential. Probably an even greater number of people got excited about the idea that, hey, I can make a whole bunch of money, either buying these things, trading these things, or starting a company in the space. And then what you realize is that when you look at the headline numbers and you say, oh my God, $2 billion of, Bored Apes of trading, money is falling from the skies. And then you look under the curtain, you say, well, there's really only 3,000 people who are trading those. Like, how many people are actually in the space, right? How scalable is it, right? And where are we? And so, I think have tried to be very conservative in the way that we've approached the space. And in particular in sports and licensed properties, we went from January of last year where we were explaining what blockchain was and what NFTs were to suddenly, 6 months later, sports leagues and teams getting 93 different proposals to be their NFT provider.
Wow.
And, and suddenly the money that was getting thrown at the space because the VC community was underinvested got way ahead of itself. And so, we walked away from some very significant partnerships because the dollars and cents didn't make any sense in terms of, what partners we're looking for. We weren't predicting that, the market was going to reset to the degree that it reset, but we very much said from the early days that 97% of the NFTs that were being created were probably going to be worth, zero or very little, 12 to 24 months from now. And so, we've kind of seen that first wave. And so I think, like anything, if you approach this with a longer term vision of where you're going and to say, listen, we're not just in it to make a quick buck. We're in it to really build a sustainable company and sustainable partnerships. And, we're selling $15 or $20 products to consumers. We're not trying to, create $100,000, NFTs overnight. just a different philosophy. And so I think to kind of level set on where we're at, the market has reset itself. Some of the folks who showed up are going to get washed out, but the handful of companies that are really thoughtful about what's being built and why it's important and how you do it are going to be the leaders of the next wave. And, we can certainly think we're one of them.
Mm. Yeah, I agree with that. What's a typical, you mentioned the 93 NFT providers coming in. I'm sure the marketing offices at some of these sporting companies must have been overwhelmed. What does a typical structure look like? Assuming you can't speak specifics about anything, but just broadly speaking, like, is the money flow from the company, from say like NFL as an example, to some NFT provider to like, what are the typical talking points?
It's, listen, each of these are unique snowflakes. But what I would say is that the licensed NFT business has kind of evolved very quickly, to mirror the traditional licensing business. And so generally you have kind of a revenue share with your content partner. And then depending upon the length of the agreement, you may or may not have some sort of financial guarantees, that you're going to deliver whether or not you sell those products. Right. So, if you're the NFL, to use your example, and, you want to license their logos to create t-shirts, right? You're going to pay a percentage of those profits to the NFL to use those logos. And, they might ask you to, pony money up front to kind of secure the fact that, you're locking up that license. What's different, obviously, in the NFT space is it's not just the initial sale, it's also the secondary sales, right? And so the revenue streams are in perpetuity, because the assets are on chain and, distributed on the internet. And so, it's a different model from that perspective. But, it's, again, like anything, I think people tend to take existing models and extrapolate them to, new technology. And so, you take individual athletes, agents who, their job is to negotiate, big numbers for their athletes to be, on a billboard or on a product. They were drooling, when the NFT opportunities came around, and, what you found was there was a bunch of companies that went and signed those deals who now can't sell any NFTs, but they still owe those guarantees. And so, listen, that'll all get sorted out in the next year.
But it's not player specific. It's not like you would have a contract with the NFL and then you'd also have contracts with each of the players.
Some companies have done that, where they've done deals with individual players. And, if they couldn't get a deal with the league, then they said, hey, player X, I want to do a deal just with you. Right. Mm-hmm. And, I can't use I can't use a picture of you, in your jersey, but I can use a picture of you in your t-shirt throwing a football. Right. And I'm going to make an NFT of that.
Right. Okay. So that would be more like I'm picturing like what brands compete over, like Nike and Under Armour. They're not competing. They don't put the NFL logo on there. They put, the commercial has like LeBron. It doesn't have LeBron within an NFL or a NBA background. Interesting. That's like a whole nother level of competitive bidding. And probably, I'm sure you guys have teams of people that engage with.
We do. We've got a great partnerships and business development team that, that really reaches out to leagues and content providers, kind of tells the Candy story, talks about, how we can deliver value, not just commercial value, but engagement value and fan value and data value. And so, that's a core part of our business.
Interesting. Awesome space. I mean, it's fun to just be on the front running of such a high octane space.
But what I tell my team as we've been building the company is, it's a great challenge and privilege to build a company from scratch. It's an even greater challenge and privilege to do it in a space that doesn't really exist, right? To, define what does it mean to be a digital collectible company in this new world.
Yeah, that's a good way to put it. And you were, you started at Parametric. You had been at finance, but I think Parametric was your foray into crypto, blockchain research / investing advising. Are there other people that you've learned from or really try to pay attention to, books, YouTube channels, et cetera? Like when you think about going from what you were doing to what you are doing, in such a short period of time. I'm sure you must have dedicated time to like learning about it. Did you approach it more casually, like surf Twitter, or did you more focus
Yeah,
on?
I mean, I would say my career in finance has always sort of been at the intersection of finance and technology. Before I started on Wall Street, my education I'm an architect from MIT, and so by nature I'm a builder. I just happen to do it in with financial products as opposed to bricks and steel. But I've always been interested in building new businesses in the finance space. And so, I created a ton of new financial products and sort of started new businesses and, helped to build new trading technology. And so that's always been a core interest of mine. So blockchain was just a natural extension, as I said, kind of really thinking about what was it going to mean? What was this new technology going to mean for stores of value and transactions and transaction processing? Um, as I mentioned, my partner, Mike Novogratz was kind of the guy who really got me, excited and oriented in the space. And then, once I sort of started to learn about it, because I'm from MIT, there's a lot of work that was done early days at MIT. And so there were resources there to kind of dig in on, done a bunch of reading and, I try to stay as curious as I can be. As there's an infinite amount of information, in this space, that you can stay on top of. Like, I'd say like the bankless guys are some of my favorites in terms of just, staying on top of what's happening in the space. And then, I try to be smart about looking around the corner and sort of seeing where things are going. Right. And like, what's the outcome of the chain wars that I think we're sort of ultimately in. And, are we moving to a multi-chain world? What's the impact of the merge going to be? And so I try to read as much as I possibly can. I try to talk to smart people and just, be humble about what I don't know and, figure out how I learn more.
Mm. Any specific things you're reading, like Substacks or any Twitter accounts that you find undervalued or worth mentioning?
Nothing I would say
Yeah,
that is, secret alpha, right?
sure,
I
sure.
I try to stay on top of crypto Twitter and, I love the guys at A16Z and, the stuff that they put out, whether it's on the podcasts or whether it's, the newsletters. And so I try to be I would try to be a voyager across lots of different sources and not just rely on one or two.
Smart, smart. Scott, where are you online? We'll have all the links I like candy.com. I was doing a little homework on the domain. I don't know exactly how you guys acquired it, but I listened to a short podcast of the guy who sold it to the people who were building the candy company prior to, which is that the origin? Like, did it go like business idea, find a domain, this is available, or did it go kind of serendipitously, hey, we have this domain available?
It was, no, it was, start the business, kind of put the vision together, started building the team, and then really thinking about what were we going to call the company? And, you know, kind of thinking about, okay, as I said earlier, like we didn't, because we're speaking to a non-crypto native audience, we didn't necessarily want a bit or a crypto, or something that was too, I'd say inaccessible for the everyday consumer in our name. We were starting in the sports space, but we knew that we were going to do stuff in entertainment and culture. And so we didn't want to have something that was completely sports focused. And so, along the lines of, what are names that everyone recognizes, people have a positive association to, and can be kind of extensible across lots of different things, Candy came up on the list. And so, we narrowed it on that and negotiated it and ended up getting that domain.
Now, can you mention how much it was?
That I cannot.
Yeah. I'm guessing it wasn't cheap. Domains. Yeah, it is a catchy one. I mean, I'll give you that. It's worth.
It costs more than my ENS domain. I'll just leave it at that.
Yeah, yeah. I think I saw it traded for 3 million. The guy in the podcast mentioned that's what it was. The transaction was to the candy company, but that was years ago. So yeah, domains aren't cheap, but that's awesome. Any particular things you want to throw out? Are you tweeting? Are you writing personally? We'll have all the candy references?
I try to keep people posted on what I'm doing on LinkedIn. Mainly, around the company. We're active on Twitter primarily. I've been probably less active putting my own sort of general thoughts out there around what's happening in the space. I need to get a little bit of breathing room to spend a bit more time on that. But yeah, I'm less personally active on Twitter. I'd say, LinkedIn tends to be where I put my thoughts out there.
Nice. Scott, thanks so much for hopping on. I enjoyed the time. Congrats on everything.
Yeah, likewise. Really enjoyed the conversation. Appreciate it, Mike.
All right. Talk soon.
Thanks.